Welcome back. We're joined now by Andrew Pyle. He's a senior investment advisor and portfolio manager at CIBC Wood Gundy and a longtime guest and friend of this television channel. Andrew, thanks a lot for joining us.
Good morning, Paul.
Let's jump right into probably the biggest earnings story for investors around the world today. The banks in Canada are going to report as well, and that may be the big story for Canadian investors. But for investors at large, it's the Nvidia results coming out on Wednesday. How will the market view these results? How will it view Nvidia's guidance in light of the DeepSeek shock that took place not so long ago, that ultra cheap Chinese artificial intelligence chatbot?
Well, I think indeed, Paul, the emphasis is going to be on the guidance. I think in terms of earnings, I mean, most analysts are comfortable, I think, going into this report. Street consensus for $2.95 a share on EPS. Barring any major disaster, I don't think we're going to see a lot of deviation from that. But it's the guidance and it's how Nvidia sees this new environment that has unrolled in the last few weeks with respect to DeepSeek. Is this something that is concerning executives at Nvidia, and that will be taken as a cue for what we can expect from the rest of the tech sector. So this report on Wednesday, I would say, dwarfs anything else, including U.S. inflation.
Interesting. You must get lots of questions from clients about Nvidia or other big name tech stocks of the like, is it too late for me to get in? What kind of answers do you provide these days to that question?
Well, the answers are like any other stock, Paul, and that is it's not too late to get into any company where we see good long-term value and a good positive outlook. And I think if we come out of this week or in these next few weeks, and the conclusion is that, look, the momentum that we've seen in recent months can continue, then I think investors should be looking at these areas for growth in their portfolio. But investors are also being stung, Paul, and we saw this on Friday, but an increasing level of uncertainty. It's not just Nvidia, it's what's happening in the policy front, what's happening to tariffs, what's happening, in fact, to the global economy. And that's really clouding the judgment by some investors that say, look, I like this stock, I think the outlook's great, should I pile in? There's other factors to consider as well.
And you've made the point recently that, at least for the time being, investors' focus really isn't on the Fed anymore. So often it's the Fed and perceived changes to its path or pace of rate changes that dominates the investor discussion. You say that's very much on the back burner right now. Tell us more about that.
Well, I think the Fed has taken themselves out of the ring right now, Paul. If you look at the language coming out of the FOMC meeting, basically inflation is not yet back to target. If we were sitting at 2% right now, if core PCE was down to 2%, we might be having a different conversation, Paul. Maybe we'd be looking at a couple more rate cuts before the summer. That's simply not the case. So I think the Fed has done the right thing and say, look, we're satisfied with where we are. We don't have to move rates. We're not going to raise rates unless something else happens. So I do think the Fed is out of the game. Now, I could be proven wrong here. We're going to get an employment report next Friday. If we see real cracks emerging in the U.S. economy, then yeah, a rate cut before the summer's back on the table. But I think right now the Fed wants to be out of this. There's more things that are going to disturb this market, and I don't think the Fed wants to be one of them.
We're going to talk about the Canadian banks, in our next conversation. But before we get there, what's your view of the TSX composite and valuations and how attractive or less so it may be versus stocks in other countries?
Well, if we didn't have tariff threats, Paul, I'd say right now the TSX looks very attractive right now relative to its North American peers. It has underperformed the S&P 500. If we were to take the Mag 7 out of the S&P 500, that underperformance is even greater. So I do see value in the TSX. I think energy can continue to provide support. Again, we'll see what the bank earnings look like this week. But it's the tariffs question, and it's hard for investors to look at a sector that looks undervalued, looks like an opportunity, and start moving money into that zone when we could 2 months from now be painting a totally different picture for the Canadian equity market.
That's Andrew Pyle. We will take a brief break.